welcome everyone. We are very excited as the Anchor Tenant team to introduce an investment opportunity for you in Europe with existing partners GMG. Allow me to quickly spend 10 minutes just on the actual investment, and then I will introduce you to our partners and the panelists, which will take you through a little bit more detail. But we appreciate your time, and we hope you find it interesting and decide to join us in this exciting little opportunity. I'm going to spend 10 minutes just giving you some background on the actual transaction. I'm going to spend literally a minute on Anchor Tenant, the team who will be looking after your money. I'm going to go through the partners, the panelists. We'll hand over to them a little bit later where they will share some of their thoughts and their insights in the deal with us. Then I think the important thing for us is the investment highlights. Although this is a development play in Portugal, I think it's important to stress that our investment is really a financial instrument, and the underlying property risk is probably slightly irrelevant, but it will be interesting anyway, because part of our presentation and our proposal to you is the opportunity to roll your investment into further residential developments or residential purchases and then qualify for the golden visa opportunity. I will take you very quickly through the capital stack, how the deal works, the structure, the risks that we have identified and the mitigators thereof, and then what the next steps are. And then I will hand over to Newman and to Johnny and their respective teams. Just some background. GMG Real Estate is by now probably well known by most of you. They are partners that we jointly invested in St. James in London with. I think there were a lot of chemistry, hence the invite to participate in this particular opportunity. And then New World doesn't need any introduction. Johnny Rabie, especially if you live in the Western Cape where I am, is a bit of a legend here. Very well known for the Rabie Group, founder of the Rabie Group, and more recently the Signatura products that we all have become very familiar to. We also, when we were approached to invest in this particular project, there was an opportunity to invest and take up this secured mezzanine facility, which is really what we do and what we decided to do. It is a straightforward cash-on-cash return of 10% per annum, very well secured. And I must thank the co-development partners on the way we negotiated the deal. I think that the deal really works very well for our investors, and the risk returns for us is very, very attractive. I just want to note that we do have a structure via Guernsey that the advisors and the portfolio managers might be familiar with, but you will be provided with an ISIN number, which means this investment can form part of your segregated portfolio. Very briefly, our team, which is known to most of you, Peter Armitage, CEO and founder of Anchor Capital, Glenn Baker, who is responsible for the asset management real estate business in Anchor Capital. I spearhead this platform on behalf of the team. Then Andrew Brooking and Simon Fifield are non-executive support. I think the two guys at the bottom, you will agree with me, are some of the better property minds in the country, and I must say their input in structuring the legal side, et cetera, is invaluable. So that's our team. On the GMG side and the New World side, I'm going to leave it over to Newman and Olivier to talk to you a little bit about themselves and the project, and the same with Johnny Bradley, who's in Portugal, the CEO of New World in Portugal, and then Alan Bell, who's the head of sales and marketing. I think if there are any questions around the golden visa side, then Alan will kick in. Okay, let's get into the meat of things. What are the investment that we propose? It's a secured bond to GMG Real Estate Luxembourg. I think in layman's terms, I put it in brackets, there's really just a secured bridging loan. So, and how it works in Portugal with developments like this, unlike South Africa, the banks want you to use your own equity to start developing or to purchase the land and all the soft costs, the architects, the QSs, etc. And only thereafter the funding kicks in. So it's fairly common for developers to put their own equity in that, as well as raise some mezzanine debt to fund that until such time that the bank comes in. So that's the instrument we've designed and come up with. It's a bond that provides you with a 10% net return. The term of the investment is 18 months. How it works, after 15 months, we give notice to GMG. They repay us or redeem the bond. And if that doesn't happen within the next 3 months after that 15 months, then we've got certain other triggers that happen that I will take you through just now. A very well secured transaction. A lot of people on the call today are property guys, so they will understand we've got a first ranking mortgage bond over the property in Lisbon, in Marvila. We are out about 30% loan to existing value, as well as a put that we've negotiated to GMG Real Estate. The total capital raise we're looking for is 5 million euros, and we facilitate 50,000 euros per investor as a minimum investment. I need to stress that the closing date for our investment is the 18th of September, and it does take time to open the accounts if you're a new investor. The accounts go via Anchor Capital Mauritius, so we need to do KYC, and there's a little bit of admin around it. So if this is of interest, please, if you don't mind, to let us know ASAP so that we can get those processes going. So that's really the key highlights of the investment. Straightforward, it's a cash on cash, 10% in euro, which I think compares extremely well with the virtually 0% interest rate that you get in the banks. I thought to introduce this slide, which I stole from the GMG investment memorandum, and all I do here is just to illustrate where our money stands in line, and that is in front of the security line. So this is taken off the feasibility, so these numbers might change slightly, but the projected equity that has gone into this transaction or is going into the transaction is just under 14 million euro. The majority of that equity comes from the two investment partners. They've got a substantial amount of equity invested, co-invested with us. Then the developers are seeking a 10 million euro mezzanine facility or mezzanine funding, and of that we have taken up 5 million, which is the secured portion. So what that illustrates to you is that our 5 million ranks in front of 19 million. 5 million euros ranks in front of 19 million euros worth of equity that have gone into the transaction at the time of when our money flows. So this looks like a very complicated slide. It's actually not. I just wanted to illustrate the flow of things at the outset of the deal, the flow of funds, and then how do we exit the transaction? How does the capital get back repaid to the investor's account? So on the left-hand side here is what you're familiar with, and that's Anchor Capital. So you can invest from South Africa. We make use of an asset swap facility that we've got. Or if your capital is offshore, you invest straight into Anchor Capital Mauritius. If you're a new client, you need to open an account, a stockbroking account at Anchor Capital Mauritius. Then our structure that's in place is Podium Partners Guernsey. So this is our third transaction out of Podium Partners. We've invested in Poland, in the industrial play with Trademark. We've invested in St. James, London, and this will be our third investment into Portugal. Podium Partners, the nature of the structure of the investment is a note. So Podium Partners issues notes that reflects the economic interests of each individual investor. So Podium Partners then in turn invest as one investor in these various products. And that is, I think, why we've unlocked such interesting and exciting little deals, is that we deal with high net worth individuals, and we collate those investments and we speak as one investor, which makes it very attractive for the likes of GMG and New World, because they don't have to go on a capital raise and speak to 30, 40, 50 individual investors. That is exactly what we're geared for. So how the deal works, or how the transaction is structured, we subscribe, Podium Partners subscribes for a mezzanine bond in GMG Real Estate for 5 million, and we receive our 10% per annum coupon on that. As security under 2B, we register a first covering mortgage bond over the property in Lisbon, just as additional security. And then what we've also managed to get out of GMG is a put back to Euro Sterling, which is a 100% subsidiary of GMG. There's a little bit of a mechanics behind here. And the reason for that is really that it's just an entity that holds all the facilities for GMG from where they fund their projects in and around Europe. And the facilities are often granted by Skybound. In this particular facility, Skybound Capital, who's well known to all of us, have given us a letter of comfort that there is a facility available to back up this put agreement. So from a security perspective, first step is we offer, we've got a bond to GMG. Thereafter, we've got a put. If we don't get our money back, then we've got a first bond over the property. So very, very well secured and very happy with that. So what happens at exit? So after 15 months, we give a 3-month notice to GMG to redeem the bond, so the capital gets repaid. If they do not repay us, then we've got to put back to euro sterling to repay us from that facility that's available in Skybound. And in the very unlikely situation thereafter, we can execute our rights under the first charge that we have over the property in Marvila. Once again, I'll just stress the great security in exchange for that return. I really just wanted to highlight one of the risks. I'm fairly comfortable with the last 4 risks that we've highlighted there in the original investment memorandum, that we've dealt with most of those, in fact all of those, and we're happy with the risks. The senior debt funding risk for us was a big grey area because of COVID, but we've had an interview with the largest, one of the very senior executives of the largest bank in Portugal, as well as the fact that GMG and New World have secured 2 facilities with Nova Banco, which is the 3rd largest bank in Portugal, and they've got a very good relationship. So in our interview with the bank, it did come out that if you're an existing client of these banks, you know, life goes on and not much might change other than perhaps pricing. There obviously are still risks. We can't guarantee that the bank funding will kick in, but I think it's very unlikely that it wouldn't. And maybe if I didn't mention this before, why the bank funding is so important for us, if we provide MEZ debt, it goes into the development as capital with the equity from the developers. And once the bank kicks the funding in, which is at a approval of planning stage, then they refund a portion of the land and the development costs, and that's where our money comes from. That's how we get our money back after 15 months. There are golden visa opportunities, which is really a hot topic nowadays. I will leave that over to Alan a little bit later. I'm sure there will be some questions. In fact, I've got some questions already that people emailed us before the webinar. So I will get Alan to speak through to that. All I want to highlight if you are interested in converting your investment into a residential unit, please, we need to talk about it beforehand. There are some preferential transactions on the table with the developer. And it's important that we pin those down before we kickstart the investment. So the next steps would be, if you're interested after listening to Newman and Johnny and the teams, is to contact us, sign a commitment letter. We've got to get going on opening the accounts, and we'll take it from there. We are all available, the entire team available for questions on email. I'm a phone call away. I Zoom with a lot of potential investors, so we are available. So at this point, I think I'm going to hand over to Newman. Newman's going to tell us a little bit about GMG and the relationship with New World. We take it from there. Newman?
Thanks, Wouter. A warm welcome to everybody this afternoon. It's an absolute pleasure to be introduced to some of you whom I know, I'm sure. This new asset in Marvila is really an exciting opportunity that we've managed to secure a while ago, and we're looking to close out the transaction end of September. Just a few words on GMG. GMG is a private investment and development company. We've been operating for the last 15 years in Europe. We started investing in Lisbon around 3 years ago. We absolutely believe in the fundamentals of the Lisbon market. We've invested around 100 million equity across 5 projects, and we're very excited about the current projects in the portfolio and, of course, the future. In terms of this particular development, we've signed a joint venture and joint development agreement with Rabie It's, again, an absolute pleasure to be working with Johnny and his team. This is a third project that we co-developing in Lisbon. The first project is our flagship, Alex Living in Amoreiras, which has been an incredible success. We launched that project middle of last year. We've sold probably 65% of the stock, and slowly and surely we're making progress with the construction. A little bit about Marvila, just to jump straight into the actual project itself. It's an asset that we fell in love with about a year ago. We secured another site diagonally across the road, which we call Marvila 1. Brilliant site, which we in planning to secure planning for 161 units, apartments. And then, of course, we bought Marvila 2, which many would argue is a slightly better site, given the fact that it's positioned between the square in Marvila and the river. A brilliant opportunity. And, you know, in terms of the asset itself, the fundamentals are quite incredible in that the position, I think, is absolutely unique. It's juxtaposed between Expo, which is a very popular and sought out area outside of Lisbon. From a pricing perspective, it's slightly cheaper than downtown Lisbon. Then the Lisbon market itself, which is quite expensive downtown. And you've got this brilliant area of Marvila, which is an up and coming neighborhood, which we believe is the future of Lisbon going forward. And I think by securing the sites at the price that we did, we can only make a success out of this particular opportunity. The partners between New World and GMG Real Estate, we're investing at least 10 million euro into this opportunity. So yes, we do co-invest in all our deals ourselves. We fundamentally back ourselves, and we work with institutional partners to raise the necessary bridge financing. You know, in terms of the fundamentals, the position is absolutely superb. The price that we pay per square meter is less than 1,100 euro per square meter, which is incredibly compelling and underpins our capital value. The substantial development of this mixed urban rehabilitation project is really going to create value. And of course, working with John Rabie and his team, who've won numerous international awards for similar urban real estate projects, only going to underpin the success of the project. The growth story in Marvila, I think, is quite unique. And for those of you who've been to Lisbon, you'll understand what we're meaning in the sense that Marvila is really this historical part of outer Lisbon that was characterized by huge warehouses, wine bottling plants, and slowly, because of the huge growth of the greater Lisbon area, it's one of the only remaining areas for actual growth for residential, for commercial. And the state has spent so much money in redeveloping the entire area from the downtown Lisbon to Expo in terms of regenerating all the roads, all the parks, cycling lanes. And they're already spending tens of millions of euro to rehabilitate this entire area. And we're really one of the first movers in this growth phase. So we absolutely believe in the market fundamentals. There's a massive shortage of residential accommodation in this area. And a lot of the demand has come, obviously, in Lisbon, with a lot of the locals being moved slowly out. Then you've got the area of Expo, which is extremely populated, very low vacancies. And then you've got this Marvila area between the airport and Expo, which really is going to be probably the next growth site outside of Lisbon. In terms of the team that we've got in Lisbon, we've got a fully fledged team in Lisbon for the last few years. We've got engineers, the project managers, the analysts, a full-time legal team, and now with Johnny's expertise on the ground here as well, we believe that our proposition here is quite unique, and we look forward to any feedback and answering any questions, and in due course, of course, showing you around Lisbon and the various sites. Johnny?
Yeah, thank you, Numi. Good afternoon to everybody. Wouter, thank you. Nice to see you sitting there very comfortably in Stellenbosch. And again, to everybody who's watching. I think, you know, what was the reason for our entree into Portugal? I had, over the years, been looking at international property, traveled extensively around the world, but couldn't really find without going into REITs or anything on the listed side, that we could develop ourselves and be involved ourselves and actually be hands-on. And then my paths crossed with Newman, and he said to me in Cape Town, he came to see us at Century City, and he said to me, have you ever been to Portugal? And I said, no, I hadn't. And a month later, we were on a plane, and we were there for to meet him, and he took us to the site where we're currently developing at Amoreus, Alex Living. And Portugal gave us a very good feeling, because it's very similar to South Africa in many, many ways. Their planning issues, the way the local authority works, and really the way that they build is very, very similar. So again, that was made me very comfortable. And in our relation, at the beginning of the relationship with the Alex project, which has been very, very successful, Numi then spoke to me and said, look here, we've got a second one. Would we be interested? And he took me down to Marvila, and I thought, I couldn't believe that it was, again, almost for those South Africans who know Cape Town well, or those who do know Cape Town or live in Cape Town, Marvila, you can almost compare it to Woodstock. So it's an urban renewal area, very close to the city, and begging for mixed-use development, whereby you can entertain the commercial aspects, the retail aspects, the coffee shops on your ground floor, and then your residential above that. And that fits into the whole urban renewal setup that we've been really pushing on. For those who don't know, we've been around, and I just want to give you a little bit of the background, since 1978. But our key major projects, of course, were Century City, which we're the owners and developers of, which we acquired from Nedbank in 2002. And have been very active around the city, and of course from Joburg and Durban over the years. So coming back to Lisbon and to Marvila, what was very exciting about Marvila is we had acquired Marvila 1, but it was very important for us to be competitive in the pricing. So, we always sell try to get to 10, 15, 20% below what the market is. And that's going to apply to Marvila 1, which will have a very positive impact on Marvila 2, because what will happen at Marvila 1 is we'll set up our proper sales, our sales offices, our sales facilities. So when we come to launch Marvila 2, everything is going to be there, and we would have already kicked off at around the 4,000, as this is selling price for the completed units I'm talking about now, at around the 4,000 euros per square meter, 4,100 upwards. And Marvila 2 will get the benefit of the success of Marvila 1. We're already touching the market at Marvila 1, and we've had, again, very strong response, and we're making sales from our South African base. Our following within the Rabie project group and the Signatura brands has a very substantial following, and people have followed us over many, many years. Are really very excited about what we're going to be doing. And I also want to just allude to what Numi is saying with regards to Marvila and the infrastructure around Marvila and to the river. It's a very special spot. And again, it's like Greenpoint in 2010, just before the World Cup. And then when the World Cup football was on, the whole of Greenpoint and that whole area got upgraded in terms of the infrastructure, and that set the growth of what you see at the Waterkant in Cape Town, and of course in the Greenpoint, Sea Point area. Very similar. And I think also by getting the critical mass, the Marvila 1 can talk to Marvila 2. So they have been designed as a project with a road in between. So they talk to one another in terms of the architecture, and they respect one another. So we really making use of all available aspects to get the view of the river, the Tigris River, which is the main river that comes off the Atlantic, which wraps around Lisbon and then up to Marvila. Expo, which Newman has alluded to, was built, I think, in '97 for the Expo where they had the World Exhibition, and it's quite an incredible suburb or city. It's like a mini city. It's almost like a century city in many ways. And almost bigger. And so this Marvila was like the little jewel in between. So having also being the pioneers in this area got us very, very excited about hopefully going to be doing a very successful project here. I think, again, we're going to be competitive. Our architecture is going to be beautiful. And again, you've got the full support here of the local authority. They're wanting to see renewal. It is a logical extension of Lisbon, and it's 10 minutes from the city centre of Lisbon. So you're right there in a perfect spot. So we very can't wait to get going on it. We're in a process of the approvals, and we're going through the normal pre-planning and planning issues that you need to do to get stuck in. And we've, of course, with our first project at Alex living in Amaraj, learned a lot how Lisbon works. And we take that experience into Marvila now as we get going. So that's about it from my side. There's any questions you want to ask me? Alan Bell, who is going to be doing the marketing presentation for you guys, you'll be able to question him too. He comes a long way with me. In the late 80s, started working for us in the Rabie Property Group into the 90s, and then he went offshore to London and in Spain, where he was, had lived. And when we got going in Portugal, and we saw it wasn't going to be a one-day game, we wanted to be involved here for many years to come. Alan was a logical guy to pull him in, and he's joining us. And then Bradley, who was one of my top guys in Cape Town, we sent him. I gave him the opportunity to go over to Portugal to manage the project on our behalf, and work jointly with the New World team, who we have a great relationship with. We've got different skills, but we combine very well together. And the exciting thing for me personally was having an offshore investment now, where I'm not investing into something where I'm a little shareholder, and I tell you one thing the one year and the next year it's different, etc., etc. I think you investors will know that we're directly involved here in the running of the project, and that makes us very comfortable. So I think I'd like to end off there. And again, thanks everybody for listening, and hopefully you'll join us in this very exciting project that we've got planned here.
Thank you, Johnny. So I think I will continue the presentation. So the idea on my side was to present you all, to give you all a brief overview of the project itself. So I will just share my screen with everybody and try to give you maybe a little bit less talk, but more pictures and graphics. So. Whilst you are investing in a pure, I would say, a financial product, I think it's quite important for you also to understand the underlying asset and what is behind the investment, the financial product you are investing in. Just wanted to present you briefly the rationale behind this investment, so from the developer point of view, and then give you some highlights on the project itself. Most of these points have already been covered by Newman, Johnny, and Wouter, but just to take them again briefly. So the project itself is a residential ground-up development project composed of 185 units. I think you understood that the location is extremely attractive, between Lisbon city center and the Expo zone along the river, and clearly on the riverfront, so really on the first line of the riverfront. The project for us as a developer is a very good risk-adjusted, present very good risk-adjusted returns, in the sense that we already have a pre-approved construction permit, which is a specificity in Portugal, but we have this pre-approval which is binding from the municipality. So basically we know exactly the use and the volume of the building we can construct on site. In terms of size, the project will represent more or less 57 million of gross development cost, and in terms of gross development value, we are looking at around 90 million euro of value. Our strategy for this project is clearly to offer attractive sales price of the apartments, really aimed at local buyers and investors looking at renting their units. So here we are not we are not basing our strategy on golden visa buyers only or on very high luxury product or social housing, but really very good quality apartments, very efficient design, and priced at a very attractive price compared to the competition. In terms of exit value, this translates into apartments starting to sell at 175,000 euro, which is very extremely attractive for local community, and then 78% of the units selling at below 550 euro, which again is very attractive for the market. Then in terms of leverage, based on our experience on the market, we have conservatively assumed 40% bank senior financing within 14 months of acquisition. I think Wouter already mentioned that, but we've got a very good relationship with Novo Banco, which is basically our preferred banking partner in Portugal. And so far, we've secured 4 financing with them for a total value of more or less 60 million euro of financing. Obviously, the deal is secured, so we already signed the promissory contract. We already paid with our own equity 8 million euro of non-refundable deposit, and we have to close this transaction by the end of September. Newman and Johnny already mentioned, and you understood that we have a local team. So I'm personally based in Lisbon. We have 12 full-time employees locally. So we are really local. We manage the project locally with local knowledge. Wouter also mentioned the healthy equity coverage ratio. So basically, the 5 million euro bridge financing you will invest in will be covered by 19 million of equity and MEZ, which translates into a 3.8 time coverage ratio, which is extremely healthy. Newman also mentioned that GMG and his partners will invest circa 10 million euro of our own equity, which is, again, shows a very strong commitment and really skin in the game from the developer side. And then another point, which we also covered briefly, is that in terms of investment structure, so we structure all our deals via Luxembourg, via a securitization vehicle, and every structure is ring-fenced and really dedicated to one project. Briefly about the location, so you understood, so we've got Marvila here, the red dot. So you can see that clearly Marvila is along the river between the Expo zone on the north and the Lisbon CBD on the south. So 3 kilometers to Expo, 7 kilometers to the south, Lisbon CBD, and only 5 kilometers to the airport. So really centrally located. Again, very, very good location. Another point very important to mention is here the Beato Creative Hub, which is a new development supported and subsidized by the Lisbon municipality, which is a tech and startup incubator, where the municipality planned to create on the first phase 3,000 jobs. One of the main tenants or actor in this hub will be Mercedes-Benz. They already signed a lease contract, and Mercedes-Benz, they will put on this site their European Research and Development Center for artificial driving, and they will bring on site more or less 300 to 400 employees, so engineers. Currently, so this will create a lot of demand from the residential side, and currently the supply of quality residence, quality apartments is close to zero. So this will bring a lot of demand from the local community to our project. Then here I wanted to try to give you a kind of feeling about the atmosphere of the Marvila surrounding by showing you briefly some images. So it's almost impossible to transmit the vibe of Marvila, but at least I'll try. So in the middle here, you can see, for example, a picture of the Underdog Gallery, which is an art gallery, world famous art gallery. Then you can see some on the bottom the working hub, which is a very well-known, also creative working hub in Marvila. Then we've got a lot of different design retail shop, like here the team plate, then very trendy coffee bars. And if I go to the next slide, you've got like these amazing warehouses converting into shops or into restaurants, like on the top corner, the motor shop, a motorbike shop, or this colorful picture, which actually is an Argentinian restaurant, also owned by a very world famous cooker. And then on the bottom right corner, sorry, you have a picture of Marvila, the center of Marvila, where you can see the river on the side, the marina, and then read the art of Marvila with our project. Here, so we talked about Marvila 1 and Marvila 2. So Marvila 1 is an existing project that we're already co-developing together with New World. So this project is already going on. So we are about to receive the construction permit and about to start the construction. And Marvila 2, which is the project basically backing the mezzanine, the bridge mezzanine financing. So both projects, you can see they go together. We are using the same architect, so the design will be more or less the same on both projects. Both projects are really similar in terms of size, in terms of number of apartments, and in terms of value. Here you can see that Marvila 2 basically is slightly better located than Marvila 1, because Marvila 2 is on the first row of the riverside, and there is no further building between Marvila 2 and the riverfront. This is just a side plan of the project. So we will co-develop the project with Delta Coffee, which is the biggest the biggest coffee producer in Portugal. So we will submit a joint construction permit, and then afterwards we will build each one our own project. It's quite a strong advantage for us to basically joint venture on the permit application with Delta Coffee, because it's one of the biggest company in Portugal. So they are extremely well connected in terms of political connection. So clearly this will help us a lot. This will help us to get the construction permit even faster than what we currently anticipate. Finally, just wanted to show you some 3D renderings of the project. So this is a view of the project from the riverfront. So on the left side here, you can see the future Delta Coffee showroom, and then on the right side, our residential project. Then an overview from the central garden. So in between, so within the project. Then an overview from the garden in between, so you can see there's a lot of light, a lot of space, some green areas with a lot of windows everywhere. And then finally this last picture, where you can see, so that's the road between Marvila 1 and Marvila 2. Marvila 1 on the left side and Marvila 2 on the right side. So this gives you an overview of the project itself. And I hope this will help you and give you even more comfort in this project.